Hi and Assalamualaikum to Prof. Dr. Kamarun Nisham. We are from Group 8 who would like to present our group projects on evaluation of 3 stocks chosen. Our group members consist of Nur Hamisa binti Isa, Khairunisa binti Abdullah Sani, Nur Alia binti Syari Anwar, Yang Zizin, and Nur Shazana binti Abdul Malik. These are the contents highlighted in this group project. Our group has selected and evaluated 3 stocks from the same industry for this study. The 3 firms are Nestle Malaysia Berhad, Dash Ready Milk Industry Berhad, and Fraser and Neef Holdings Berhad, which is FNN. All selected industries were in the food and beverage sector, F&B.
Hello and greetings everyone, I'm Khairunisa binti Abdullah Sani and my number 3 is 280537. Today I will explain more about the economic analysis. The activities done by a country's central bank to regulate the money supply and accomplish macroeconomic objectives that encourage long-term economic growth are referred to as the demand side of economic policy. At its next Monetary Policy Committee meetings, Bank Negara Malaysia is anticipated to keep raising the overnight policy rate, stated by Abdul Jamal 2023. The outlook for the economy is anticipated to continue to improve in 2022 and resume its prospective development trajectory underpinned by stable domestic and foreign demand and increased vaccine coverage. Conversely, fiscal policy refers to the action taken by government to stabilize the economy, namely through altering the distribution and rates of government expenditure and taxation. According to the latest current data, the economy of Malaysia is slowly expanding, driven by robust export growth and rising domestic demand. Furthermore, it is anticipated that Bank Negara will keep raising the overnight policy rate, which is now set at 2.75%. We move to industry analysis. Therefore, while the revenues of FNN 5.4% annually is anticipated to increase lower than 20% annually, profits are expected to increase but not drastically. Therefore, while the revenues of Nestle are anticipated to increase lower than 20% annually, profits are expected to increase but not drastically. Additionally, it is anticipated that FNN's earnings will rise at a slower rate than the Malaysian market at 11.4% annually, which is per year. Revenue for Dash Ready Milk Industry Berhad 2.9% annually is anticipated to increase more slowly compared to Malaysia market at 6% each year. Revenue at FNN at 5.4% annually is anticipated to increase more slowly compared to Malaysia market 6% each year. Revenue at Nestle 4% annually is anticipated to increase more slowly compared to Malaysia market 6% each year. Additionally, it is anticipated that Nestle's earnings will rise at a slower rate than the Malaysia market at 11.4% annually.
Hi, my name is Nur Shazana binti Abdul Malik and my metric number is 281907. Based on this data, I would like to explain about current ratio and quick ratio, which is ratio used to measure liquidity of the company. Whether the company can repay its current liability using its current asset, but the quick ratio has excluded inventory because inventory is difficult to sell for used cash overall. Fraser and Neef, known as FNN, have achieved the highest current ratio and quick ratio, which is 2.13 and 1.56 respectively, compared to other companies. This is because it does not have any debt, while other companies do. Therefore, it has lower current liabilities and it can achieve the highest current ratio. Finally, current ratio figures show that it has 2.13 ringgit Malaysia of current asset to repay every 1 ringgit Malaysia of its current liability, while the quick ratio figures show that it has 1.46 ringgit Malaysia of current asset excluding inventory to repay every 1 ringgit Malaysia of its current liability. Nestle Malaysian Berhad is the company with the lowest average liquidity ratio for 5 years among all companies, while current ratio for Nestle is 0.65 and the quick ratio is 0.59. This indicates that it does not have sufficient ability to repay current liability using its current asset. Now, I would like to talk about activity ratio, which is a ratio that measures the efficiency of a company to generate sales by using existing asset. Account receivable turnover ratio is an account that generates sales by giving debt, and the company can manage the return of debt payments efficiently. Inventory turnover ratio is the efficiency of a company only use asset to generate sales. Nestle Malaysia Berhad achieved the higher figure in the account receivable turnover ratio of 18.8831. This shows that the company Nestle Malaysian Berhad can manage its asset well to get a higher amount of sales, and the total asset turnover has reached a figure of 1.9664, even though Dutch Lady has a relatively large amount. But the amount found in Nestle Malaysia is also not too low. This also shows that this company can generate sales efficiently and well. Next, for the inventory turnover ratio, Nestle Berhad Company has recorded the highest average for these 5 years from 2017 to 2021. In the difference between these three companies, which is 8.3551. This can be analyzed that the inventory is carried out well and very fast sales result. However, Dutch ready milk industry also has an average turnover ratio for all activity which it shows that it is a good and has efficiency as well as generating sales using only the company's asset. Now I will pass to the next presenter to continue the presentation. Thank you.
Good day, total. My name is Zhi and my entry number 281330. And now I will continue to the leverage ratio for these three companies. As we can see from the table here, Nestle has the highest DE ratio, which is 0.2577 compared to Dutch Lady and FNN. And this indicates that Nestle is more difficult to cover all of their debts and more riskier compared to other companies. And Nestle also have the highest equity multiplier ratio, which is 4.5412, and have the lowest time interest earn ratio, which is 22.1543 among these three companies. So that we can conclude that Nestle possesses a higher leverage ratio, and also the leverage risk to investor and creditors. And also, Nestle also has the worst performance and is more riskier compared to other companies. That's all for me, and I will pass to the next presenter. Thank you.
Hi, my name is Nur Hamiza binti Isa with metric number 272965. Based on this figure, I will explain about profitability ratio. With an average net profit margin of 0.12, Dutch Lady Milk Industry Berhad had the highest net profit margin. The average net profit margin of 0.12 over the last 5 years means that for every RM ringgit in sales, the company will make 12 cents in profit and also had the highest 5-year average return on equity of any other company at 0.83. This demonstrates that of the three companies, it had the highest average 5-year return for its shareholders who are also its investors. Dutch Lady also shows that the highest figure of 0.12 on the average return of assets for 5 years demonstrate that it is the company among the three that is most effective at making a profit from its assets. Next, common stock ratio. Among all the companies, Nestle Malaysia Berhad had the highest price to book value ratio, which is 51.0, and trailing PE ratio 51.12, both average over a 5 years period. This demonstrates the high firm value of Nestle Malaysia Berhad, but it may also be a sign that its stock price is overvalued and about to decline. The highest average dividend payout ratio over the course of 5 years was recorded by Dutch Lady Milk Industry Berhad at 3.68. This demonstrates that when compared to the other companies, it pays the highest percentage of profits as dividends to shareholders on average over a 5 years period. Next, I will explain about intrinsic value. The intrinsic value can be computed by value investor using fundamental analysis. In this method, an analyst has a tool at both, which is qualitative factor and quantitative factor. So, based on this, we use quantitative factor, which is use financial statement analysis. Based on this, we can see that Dutch Lady is the best company to invest because the market value is highest than other. In 2017 to 2021, Dutch Lady companies reported an income increase from 149,074 to 248,000, which was spent on purchasing property, plant and equipment, and did not issue new debt, which result in FCFE of negative 6,307, which was lower than others. As you can see, in 1 year, the company recorded a very positive FCFE, and another year it was very negative. Although the operating activities were not very different, the reason is the large investment made in the purchase of additional PP&E. Since equity investor must finance the purchase of the asset, the free cash flow to equity figure must take this into account. That's all from me. Thank you.
Okay, I will continue to the DDM model and PE model in determining the company's intrinsic value. As we assume all dividends will grow by a constant rate on each company. And based on this dividend discounted model, the intrinsic value of Nestle is greater than its market value, which means that Nestle stocks is undervalued and investors will look at it as an opportunity to buy their stock. And in contrast, Dutch Lady and F&N is overvalued because their market price is greater than its intrinsic value. So it indicates that investors will sell their share because it's not a good time to invest in it. And next we move to the PE model here. As we can see very obviously, all the companies' intrinsic value are greater than their market price, so that their stock is undervalued, and the investor may buy the shares as because they think that it is a good time to invest. And so as a conclusion, for the intrinsic value, investors shall buy the Nestle stock because their intrinsic value is greater than its market value in both PE and the DDM model. So that's all for me, and I will pass to the next presenter. Thank you.
Before I interpret the figure shown on this slide, I would like to highlight that the blue line represented the MACD line, while the orange line represents the signal line. So from this figure, we can observe that a strong buy signal for investors somewhere in late May when the MACD line crossed above the signal line. The MACD line, which we can see cross from above to below the signal line near the end of August, indicates that the indicator is bearish. This suggests that stockholders should sell their shares as well. According to the RSI chart in figure for Nestle Malaysia Berhad provided above, it is evident that Nestle Malaysia Berhad RSI overbought twice in 2022, at the middle of February and toward the end of November. According to figure, we can observe a buy signal for investors in the middle of March until May when the MACD line crossed above the signal line. The MACD line is seen as bullish when it crosses over the signal line from below. The MACD line, which we can see cross from above to below the signal line near the end of August, indicates that the indicator is bearish. This suggests that stockholders should sell their shares as well. According to the RSI chart in figure for Dutch Lady provided above, we can see RSI overbought in April, and in September, the RSI fell across the scale of 30, which signaled that the stock price has declined and the stock was oversold. According to the figure, we can observe a strong buy signal for investors in the middle of March until the end of May when the MACD line crossed above the signal line. The MACD line is seen as bullish when it crossed over the signal line from below. The MACD line, which we can see cross below the signal line from September to November, indicates that the indicator is bearish. This suggests that stockholders should sell their shares as well. According to the RSI chart in figure for FNN provided above, we can see RSI oversold twice in March and October, and there are overvalued or overbought stocks in August, as the RSI at the end of August shows that it exceeds 70. Based on the few evaluations conducted, we discovered that Dutch Lady Milk Industries is the most valuable stock that can be purchased among the selected firms we chose. We used fundamental analysis and discovered that Dutch Lady outperforms the other two firms. Dutch Lady performs average, current, and quick ratios. This demonstrates that Dutch Lady can quickly pay off the present liabilities. In terms of activity ratios, Dutch Lady achieved the highest total asset turnover. This demonstrates that Dutch Lady may effectively drive sales by granting credit without prolonging the payment time. Additionally, among the three firms, Dutch Lady has had the greatest net profit margin, return on asset, and average return on equity during the past 5 years. This demonstrates that Dutch Lady was the most effective at turning a profit from its asset. Finally, for the common stock ratio, Dutch Lady likewise has the highest dividend payment ratio. In summary, we agree to recommend Dutch Lady Milk Industries as the one stock that should be bought.